famous jockey Frankie Dettori has been named as the mystery taxpayer in a case against HMRC over a failed tax avoidance scheme. My name is Robin Moore and welcome to this week's episode of Tax Tidbits, where for the past year the public have been speculating about the identity of a taxpayer in a high-profile HMRC case. Well, the suspense ended this week when tribunal judges revealed that it was none other than Frankie Dettori. Despite spending heavily to keep his name under wraps, his involvement in a failed tax avoidance scheme is now public. He claims he relied on professional advisors to handle his finances, but when the scheme fell apart, he fired them and is now working with HMRC to sort out the mess. The scheme was ruled as a sham by tax authorities and shows how risky tax schemes can backfire. Chancellor Rachel Reeves is cracking down on corruption and tax evasion to help boost the struggling economy. She has brought in Tom Mayo as the UK's first COVID corruption commissioner to track down billions lost during the pandemic, like the £8.7 billion wasted on dodgy PPE deals. If successful, this effort could reclaim up to £3 billion in his 12-month term, well worth his £84,000 salary. Reeves has also set up a tax panel to modernise HMRC and tackle tax dodging. These steps aim to recover lost money without piling on more taxes, a move that could ease pressure on both the government and taxpayers. Speaking about tax rises, Prime Minister Keir Starmer has said that he doesn't plan to raise taxes again before the next election, but can't completely rule it out if unexpected events come up. After announcing 6 key pledges like boosting living standards, fixing the NHS and building more homes, he explained that tough decisions are needed to improve the economy. Bearing in mind that the government has already raised taxes to fund a £70 billion spending plan, which has sparked concerns from businesses about the impact on jobs and pay. Starmer insists that these moves were necessary and wants voters to judge him on whether they are better off by the next election. A study by ICAEW and CIOT has said that HMRC could save £36 million a year and cut 1.7 million hours of call handlers' time by using an automated tracking system to let people track the progress of their tax queries. Right now, a third of calls and web chats are just people chasing updates on existing queries, which highlights the inefficiencies in HMRC's current processes. The report also found long wait times, low success rates for resolving issues, and mistakes that create even more calls. Shocker. To fix this, the report suggests better training for staff, giving them ownership of cases and further investment in digital services. While these changes will take time, the findings from the report provide a solid plan to make HMRC's services faster and more efficient. Coffee prices have reached record highs, with Arabica beans hitting $3.44 per pound. This is mainly due to bad weather in top producers Brazil and Vietnam, plus growing global demand. Big coffee brands like Nestlé and Lavazza, which have been absorbing increasing raw material costs until this point, are now considering raising prices early next year to account for the sharp increases. So, seeing as we will all be reaching for strong cups of coffee come January, whether it's recovering from a post-New Year's hangover or powering through the January tax return deadline, we can expect to be spending a few more pennies to keep us going. That brings us to the end of this week's episode. If you enjoyed this video, please make sure to give it a thumbs up and subscribe to our channel. I'll see you back here next Thursday.